Today. There are a few questions I want to answer. I received email saying, can you recommend me some marijuana stocks, penny stocks? I don't know marijuana stock, penny stocks. I don't trade penny stocks, and you shouldn't be trading unless you're a gambler or you know something going on. So marijuana stocks, penny marijuana stocks, I don't know anything about it. Then someone sent email, I found your website and you look legit. Can you recommend me some cheap stocks which I can buy and make like 20%? So when I ask him, okay, what expectation you have, 20% gain in what period? No idea what period. Just want to make 20%. That's the figure he got from somewhere. 20% gain. Don't know how, but want some stock, make 20%. It's like, yes, Marcelo is like waiting for God to make large deposit in the account. Then today someone sent a message here, question by Vinod. He's asking, should I buy weekly option, a monthly option, expiry in few months or a year? So again, how just by reading that message, what options I buy, how do I tell you what options to buy? If you expect stocks to move within a week time period, yes, you can buy weekly. If you think the stock will move in your direction and hit the target within a month, you buy that. If you think fundamentally the stock is strong and you expect a move during the 1 year period, you can go and buy leap. So it all depends on what you think. So generally the rule is to buy at least 60 days time minimum and 50 to 60 days and one strike in the money. So that's the rule. I don't trade weekly hardly. So what options you want to buy, it's all up to you. What you forecast. If you buy out of the money calls, you better expect the stock to move in the direction right away. Otherwise you will lose money even if the stock hits the target. So you buy one strike in the money or two strike in the money, or buy 60 days, 90 days time, give some time. So it all depends, what you are expecting. Anyway, so today I have few charts, not many, but still a lot of charts. I'll go over the charts. I'll go over the market's support and resistance level. So the market is sandwiched between support and resistance levels, and the February 9th low so far has been held. So that's a good news. So I'll skip some slides, which I go through in other presentations. So today I'll keep it short because of the Easter holiday. There are not many people, there are only like 60 of you. So I'll explain the Apple chart. So here's the Apple chart. And I showed you the chart of Apple. It was going down. 162 was the support. It did not violate 162. It did not even touch 162. It reversed. So you see that it reversed, and the formation was bullish. So it gapped up, and it tried to break the 50-day moving average on 26th of March. So you see 165 is now support. So if I'm looking at Apple, I'll say, okay, 165 is now support. Below is 162. So it didn't touch 162. It reversed at 165. So it went 165. Then what happened next? It came down. It came down for 2 days, but again, it held 165. So you see, it's clearly telling you 165 is the support. So for now, Apple is 165 support. So on 29, it moved up again. So it tested 165 support twice. So for now, I would assume that Apple has support of 165, and 171, 172 is the resistance area. So if it breaks 171, 172, it's good. 165 at the low level, lower side is the support. So Apple is sandwiched in between. What happens when the market hits some support level on some key dates? the leaders like Apple, Facebook, all these Baidu, Amazon, Google, they are the one, they should lead the market. The other boys will follow later. So those who have money, deep pocket, those who are courageous, they are the one. Oh, I am not showing the chart. Sorry. Okay, here. Thank you. The chart was frozen. Sorry, here is the Apple. So I was talking about, I'm sorry, I didn't realize. That's why I keep the chat window open. So here's the Apple again. So Apple, you see Apple fell at 165 and then I didn't touch 162, right? 200-day moving average. And then it reversed. So this move was powerful. It gapped up and it kept moving to 50-day moving average, but then it reversed again, but it tested 165. So 165 on 28th of March. And then what happened? It gapped up again. So back-to-back gap up. 165 is the support. 171 is the resistance. So what I was telling you, the market on 28, 29 came very close to February 9 lows, some markets, and the market moved up. So when the market moves up, the leaders are the one who move first. So there are like 8,000 stocks, so all of them don't move. The small caps are the last one, they move at the end. So the big boys move first, like Amazon, Google, Apple, Facebook. They are the one. These are getting bought at the low on Friday, on Thursday. So if suppose, let's assume the scenario, the market wants to move up because it tested the February 9th low. Now these stocks will continue to move up, but then other stocks will move. So other stocks will move, then the market will move up a little bit. Then other stocks will move, the other institutions or big boys, they will say, okay, these stocks have already moved, what else we can buy? So they will go and buy something else. Then the market will move up. Then, and the process will go on and on and on. And then a lot of stocks which are moving below 200-day moving average or below 50-day moving average, they will come up. And then the rally builds up. So it takes time for the beaten up market to stabilize and move. So the sign is look for the leaders. So look for Apple, Facebook, Google, Amazon, Baidu, Baba, all these. Look for these leaders, what they are doing. So this is a good sign for the market. So Apple was moving up. Next is Boeing. So Boeing is a part of index. I show you the chart from the beginning. We traded Boeing calls and puts, made money, and now we think that Boeing is again going up. So I'm showing you the chart of Boeing from 19 March, what it did. So this is back to back. So we had a puts and we sold here. Then we saw back to back hammer. So higher lows forming. So it's a sign that Boeing wants to go up. So you need to get out of the puts and position yourself with the calls. So this is what happened on 20 March. It went up, we sold the calls. Then it formed the 320 support, solid support. So if I look back, always look back on the left side. So always look back on the left side and say, where is the support? So here you see the support twice, right? 3 times. This, all these are telling you there's a support. So this is what Boeing did. So Boeing also moving up, so it's a good sign for the market. I'm not saying the market will go up because of just Boeing, but I'm just giving you some stocks which are trying to move up. So Boeing was moving up on 27th, then it came down, but it's still, if you remember my presentation on MU had the same kind of pattern, right? MU had at $40. So if you look at MU chart, you will see it had the same pattern and then how it went to 64. So same kind is again is this broke. So this broke this 320, 321 level, this support, right? But intraday it broke, but it bounced back up and closed very close to 319, 320. So the point is intraday the stock can break, but then the close price matters. So where the stock closed. So even though it broke, but it went back up. So it is safe to say that this is 319, 320 is the support for Boeing. And you see this tiny candle now. So This is what the stock is doing. It's trying to break, but it's not breaking. So if it breaks 324, 325, it's again bullish. So Boeing can be watched for Monday. Baidu, I'm showing you the chart of Baidu, how we traded Baidu. So when Baidu broke 50-day moving average, that's your sign. Exactly. I mean, the sign came here, but there's another sign when Baidu wants to go down because it broke 50-day moving average. So it gapped down below 50-day moving average. So if your scan, you can set up the scan saying stocks gapping down. Before it was 50-day moving average. Today it is below 50-day moving average. So give me all those stocks. You can set up the scan like that, before, after, and gap down. So before 50-day moving average, now it's below 50-day moving average, and it gapped down. So my scan picked up this. So I sent alert to buy puts, and then what happened? You see, it broke, even broke a 200-day moving average. So this was a false. Just because the stock moved above 200-day moving average, it doesn't mean it found support and now we should buy calls. We need to wait. We need to wait for the confirmation. Confirmation didn't come and the stock gapped down. So Baidu is going down. Baidu is in bearish territory because it's trading below 200-day moving average. The next is Dollar General. It looks like Dollar General wants to go up, so I have it on radar. You should keep it. If it breaks 95, 96, it's going up. This one, Facebook. So Facebook this is like a no-brainer for me. When you see this solid, if you remember the Apple chart, let me see Apple chart. I go back to Apple chart, show you same pattern. Apple, you see this Apple V-shaped recovery, but at this level, how much money people made when they bought, the boys bought here. Only the big boys with deep pocket can make this kind of hammer. Me and you cannot make it. All together, 74 people attending, all of us put the money. We won't be able to make this kind of hammer. Even if you put all of our retirement money in the Apple, only the deep pocket can make this powerful hammer. And see the V-shaped recovery. So same pattern. Look at this Facebook. Look at this one. Now you will regret if you don't go long on Facebook. If you're not long, you will regret later. And you will say, oh, I missed that move. So everybody should be long on Facebook based on this chart that Facebook is long. And you see, so Facebook is long, put this solid hammer, it's like deep thrust, and it moved up, but then it tested again. So this is just a second. So this is what I prepared this chart at 10:04 a.m. 27th of March. So it's everything looking good, right? Because of the hammer, and then I say, okay, gap up, I should buy. We went long, but then it pulled back. But it's still long. It's still long because of it's not violating this low. As long as it's not violating this low, it's still long. Facebook is long. Now this is second entry came gap up. This is second entry gap up. So Facebook is long, solid long, and you should hold it till it breaks this. So I receive emails saying, oh, this is Facebook is going down, should I sell? So you're not following your plan. Then another email came this weekend. Mark Zuckerberg is defiant. I don't know what's defiant, whatever he said maybe. So he's defiant. I should be exiting from Facebook. Okay, go ahead, exit. So you're not following the plan. So this is the gap up, and this is the resistance here. 162 now is resistance, and it's solid long. So Facebook is long. Foot Locker looks like going up. You see, I drew this line, support line. It looks like Foot Locker is going up. Foot Locker and Nike both were going up. So something is going on with these stocks, shoes related stocks. So Foot Locker is going up. LVS. So we traded LVS. When I saw this candle, LVS was going down like this, and then WIN was also going down. So I had to choose. I said, okay, which one I should choose, LVS or WIN? So I chose WIN. I chose LVS, and it dropped. So it dropped. We made money on the puts simply because of that candle here. So It looks like it found what resistance. I said, okay, I take my chance, and I bought puts. And Win was also going down. Win was down like $3-4. So this was not the only stock. So whenever some stock is going down or up, you look at other stocks in the same category and say, okay, is there something going on with that sector or industry group? If the other stocks are moving, then something is going on with that stock is not alone. So then you choose your stock. So I chose LVS. So it dropped like that. So then it stopped. See how it reversed? It gap out. So this was your first confirmation, first clue that LVS is now reversing, and then it gapped up again. So this telling us that LVS is now reversing. So stocks do 3-day move, 3-day, 5-day, 7-day move, usually 3-day, and then they just reverse. So there's no reason. So why would I buy one year option if I'm trading? Why would I buy 1-year option on this LVS puts? Or why would I buy 1 week? I don't know. It will hit the target in 1 week, or it will hit the target in 2 weeks. I don't know. So I cannot say buy 1 year, 6 months. It all depends. If you're buying something like Facebook, maybe you want to buy 1 year option in the money, like 145 strike, 150 strike, January, February, and hold it. So Facebook, because it's at the beginning of the trend. So Facebook is at the beginning of the trend, you may want to buy it. But the stock which is not at the beginning of the trend, you want to buy less time. Facebook, you can buy long term and then hold it, and then sell the call against it and keep, um, keep making money, premium, collect money, sell out of the money calls, etc. So do whatever you have to do. Buy deep in the money calls for Facebook for January, February strike. So LVS drop. Now Microsoft. So another one is the leader is the Microsoft. So Microsoft was also moving on a down day. So I look at this, I said this looks bullish, but then it fell, but it held the support. So Microsoft looks like also is the leader in this right now, along with Apple, Facebook. So Apple, Facebook, Amazon, Google, Microsoft, these are the leaders right now. So they are the ones who are getting bought. So keep an eye on that. If they continue to move and they get out of hand, then they will come into another stocks to buy, because they say, okay, these already moved. Now where we put the money? So they find something else. So keep an eye on other stocks. You should have a list of your stocks. So NVIDIA also is another one which can move. So NVIDIA CEO was on CNBC with Jim Cramer on Thursday, I think. So NVIDIA is finding support, and I feel see, when I draw the line, you need to draw the line which at least touch 3 times. So 3 times touching is kind of support. It's not a strong support. It doesn't mean that it will not break. The stock can break, but right now, if I draw this line from here all the way, is 220 is the support. So NVIDIA is holding 220 support. So you can go long on NVIDIA. Then this is your stop. So NVIDIA is long, and okay. So I'm building a new computer. So I went to one of the shop here. It's very big. So I said, okay, I need NVIDIA card. They don't have NVIDIA card. They said ran out. So 1060 and 1070. 1070 NVIDIA graphic card, if you know what I'm talking, it's like $700-800, and the 1060 is 400. I need 1060 card, and they didn't have. So I said, what's happening? So whenever you go to those stores, you will see a lot of miners and gamers. They just buying NVIDIA, and they don't have it. They said we need to back order. So you cannot find NVIDIA card easily. So they ran out, and they were running out in few months when cryptocurrency was in the news. So NVIDIA is doing things. NVIDIA has a support here, 220. So keep an eye on NVIDIA. It can just start moving up. UAL looks like it's coming down towards 66. So you can keep an eye on UAL. X. Now another one which looks like in this rally starts to move is X. So you see this X, this is a bullish pattern. So this candle is bullish. So X wants to move up. So keep an eye on X, steel stock. So it fell all the way from 48 to 32. So there's a big room here to move up. So X is another one which can move up. So I have it on radar. So that's all for stock chart. I'll go over the market indices. I'll show you some charts and show you the support and resistance. So I think you should pay attention to the support and resistance and make money. So this chart was prepared for Dow Jones on 26. So 23,500 hit and then it gapped up. So looks like it's, you see, here's the February 9th low. So if you say, okay, February 9th low was the low, and this January, I think this is January 26 is the high. So if this low is not violated, as long as this low is not violated, market is, you can still say that, okay, market is not yet in the bear territory. And this is above 200-day moving average. So this low is very important for February 9th low. So it gapped up, it looks like it want to go up on 26 March. But then it pulls back, still above. So still you can have we have a point of reference, this 200-day moving average and this low. So if you're looking at the market, you keep, it doesn't matter if it's down 100 points or 50 points, you need to have a reference. What is my reference? This is your reference. This is what it is. You cannot say, okay, market is going to crash again. As long as this holds, this area holds, it could recover. The market could recover to the upside. So you have this reference, this hammer. Hammer gets tested many times, so keep an eye on hammer. So Dow Jones is still trapped. Another one, S&P. So you see S&P how it touched 200-day moving average on 23rd, but it did not. February 9th low is still valid. So if this is still valid, which is 25.25. So this is your support level. Ultimate support is 25.25. So you need to keep an eye on this 25.25. It touched and then it bounced back up. So it's still holding 200-day moving average, and this is your reference. So 100 point away, 26.05, 25.25. So 80 points away. So 80 points market is from breaking this low. So still you can say market can bounce back up. The market still can bounce back up. Same with NASDAQ. This is your February 9th low. You need to keep an eye on this and rising 200 days. So this is one reference, and here's another reference. And NASDAQ is moving up. Russell, same thing. February 9th low, and it's holding this 200-day here. So if you look at February 9th low point of view, S&P and Dow Jones, they are the one which is the closest. So Dow Jones came very close to February 9th low and bounced back up. And then the S&P, then NASDAQ, and then Russell. And so it's okay, Russell is the one which will move at the end because these are the small cap stocks. The little boys buy penny stocks and $4 stock, $5 stock. Those who want to make 20% gain, they are the one. Those who big boys, they don't buy those little stocks. They are buying this. So keep an eye. This is your reference. So let's see what else I have. QQQ. So I prepared the chart for QQQ. QQQ is doing this. It's far from hammer, but here it looks like it's. I mean, if NASDAQ moves, QQQ will move. So keep an eye on NASDAQ stocks for QQQ. So Apple, Baidu, Baba, all these big boys, Amazon, Google. So this is the support and resistance level for NASDAQ. So 64.05 is the support. It closed at, NASDAQ closed at 65.81. So this is the support and this is the resistance, 67.50. S&P is sandwiched between support and resistance. It's right sitting at support. So support and resistance is trapped in between. And 25.25 is the February 9th low. So you watch 25.25 and 25.75. Dow Jones is also little above the support and is sitting above 23.612 and facing 24,600 resistance. These numbers are my own analysis through algorithm. So These are the numbers. 24,600 is the resistance and 23,612 is the support. So Dow Jones is sitting above support. Russell 2000 is also sitting above support, 1529. So Russell is sandwiched between the resistance and support, and S&P also, and Dow Jones also. This one is far. Sort of resistance for Nasdaq is far. When the resistance is far, the market can keep move up, up, up. The stock will move and then eventually hit the resistance. So the way I trade, I look at the closest resistance and then look for that market. So whatever is the closest resistance, I see that market, whether it breaks that resistance. So if it breaks that resistance, then I say, okay, thank you. So now you conquered this index has conquered this resistance level. Now let me see other index, what it's doing. So as the market moves, then another index I look. So for instance, Dow Jones crossed 24,600. I'll say, okay, so it crossed this resistance. Now what about S&P? Is S&P crossing the resistance? Yes, it crossed. So I say, okay, two, tick, mark. Two of them cross the resistance. Then the third one, I say, okay, which one is closest to the resistance? I say, okay, Russell. So I look at Russell and I say, okay, this one also crossed. So out of 4, 3 have crossed the resistance. Now this one better move. Nasdaq, is it crossing the resistance? Is it close? What is doing near the resistance? So this become my main index. Once these 3 have crossed the resistance, then this is the one I need to watch, Nasdaq 100, because this is still below resistance. So I watch this index and relate stocks related to this index. And if it crosses the resistance and have support, solid support, then I know, okay, the market is moving. And the market, you can see the rhythm. You need to have 500, 600 main stock and see what they are doing. So initially, when the market is bottoming, only few stocks will show you the buy sign, like big stocks, Apple, Facebook, etc., Amazon, Google. If you look at those charts, they're showing you that they're bouncing up. All others are not. So keep an eye on that, and then the stock build up. The list goes on, and finally everything is in green, and the market goes on the top, and then it tops out, and then it falls back. So this is the cycle of the stock market. So on the other hand, if suppose the bull market end, then these are the indices level. If they break these levels, then the bear market could start. So 2500 S&P is very important. The February 9th low is 2525. So now how the market can fake us. The market can fake like this. It can come to 2525, which is February 9th low, and then bounce back up from 2500. So the 2500 is the ultimate number. It's a round number, 2500. You need to watch that. 2525 is the February 9th low. If it breaks, give and take 25 points, and the program will trigger, and then you get faked out, and then big boys comes in. Those who are smart, they buy at 2500. So 2500 is the key number out of all these indices. This is what you need to watch: the February 9th low of 2525, and then 2500. This must not be broken at any cost. If it breaks, then end of bull market. So market is going up for a long time. We know 2009, it's 2018. So anything can happen. And long-term target. So I gave you the low. It shouldn't break 25, but on the other hand, 3120 is my target for S&P, and 31,000 is the Dow Jones target. So although the market is down, but these are my long-term target. They are still valid. So market could still go up. 31, it depends, right? So 3120 is my long-term target. 2500 is the ultimate number where things can get very ugly. So that's all I have. And yes, so I have a $17 trial for 2 weeks. If you're not a member, you can send me email, or you can look at this page. It's called Swing Option Trial Offer. So you can join Swing Option for 2 weeks and see if you like. And if you like, you can continue. I draw the line on a stock chart. So they have a tool, Jason. They have a tool. So all platforms have tools. So you can draw the line. I draw the line to show you, but I don't, when I'm trading, I'm not drawing the line as such. I just see it. So whenever somebody comes and I teach my 6-month coaching program, I'm teaching, they're asking me where's the support, I just show them on draw the line. I just draw the line, uh, trend line and the support and resistance. So it comes with the habit. So you need to connect. You need to connect the dots. So you will get into the habit. Just keep practicing. Go on the left side and see if you can touch 3 points to draw the trend line and draw the horizontal line. See where the congestion is. I do that way. So I think I answered all the questions, and I wish you good luck. Happy Easter. And next webinar will be on next Sunday. After that, I will take a break. So this Sunday, coming Sunday, I will have a webinar, but after that, I will not have a webinar, and then I will have. So you will get informed. So thank you. If you have any other question I didn't answer, you can send me email. Today I had 4 meetings, so today this was the 4th time I'm talking. So my throat is dry. So thank you for coming, and I wish you all the best. Thank you. Bye.